Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets, an evening edition on Wednesday, the 12th of January. Starting off with Avacta, which has been a bit of a shocker in terms of the gap down that we had this week, especially after the gap through the 50-day moving average that we had in the, the latter part of last month. That island top, created this decline that we've had. I suppose if there's a fig leaf of hope, or a couple of fig leaves of hope, the first is that we've actually bear trapped from below the support line there from back in January last year. So that was around the 78 pence area. So if you are a fan of the shares, then ideally there's no end of day close back below that ahead of an attempt to regain the 100 pence zone. The other point is that the shares, with that dip that we had yesterday, it went to a very oversold level, the most oversold they were all year, or in the past year, and probably for longer than that, actually. I think the last time they were that oversold was before the great rally of 2020, so that is something to consider, and that may mean that there is some momentum while we hold above the 78 pence level. The other thing, I suppose, is also we had the hammer candle yesterday on the 11th, and then the open on the low and the close on the high, which is a very strong candle. So maybe there is some interest here, at least for a rally towards the 100 pence area over the next couple of weeks or so. Moving along to another situation which is looking interesting. I had a sort of a request for it a few weeks ago, and it looks like the shares are turning. Here we see ARC Minerals break that March resistance line there around 2.4 pence, and above that looking for a target as high as 3.7, 3.8 pence at the top of the October broadening triangle, and that could be hit as soon as the end of next month. Great looking uptrend line in the RSI window. That's a bullish divergence uptrend line there for the shares, which should support this stock in the near term. Stock which is going from strength to strength, and was identified here quite some time ago, is Bearwealth Mining. The target previously around the 13 pence area, above that resistance line there. Then we're looking towards 17 pence, which is a line of resistance from, back in the middle of 2020. So above 13, looking for 20 pence, 17 pence rather, as soon as the end of this month, something like that. Moving along to Deep Verge, which had a little bit of a sell-off yesterday, but it's bounced back today. Here we've got the shares still trying to hold on to that uptrend line from the early part of 2020. The good thing here is, again, that we seem to have had a bear trap below that line, a bit like Avacta, that we just went to a temporary, testing the lows of October, and then have snapped back quite well. That suggests that, at the very least, the shares should be able to head back to the 50-day moving average around 26 pence. The other plus point here is that we've closed above the top of the gap down there, which is a decent technical or charting buy signal, so above 22.5 on an end-of-day close basis. We've got that trigger towards 26 pence over the next couple of weeks or so. Moving on to Eurasia Mining, where we've been looking for the shares to break a line of resistance from back in September for quite some time. I would say that, although you might have to say, you could argue exactly where that resistance line is, the shares have basically broken the recent downtrend from September, with the end of day close at 25 pence, maybe 24.5 pence was actually the line, and we've remained above the 50-day moving average at 24 pence as well. So just making that call here that the shares have or are ready to break out, and if you're fussy, maybe you wait for an end of day close about 26 pence, but that September resistance line break and the RSI above neutral 50 does suggest that we're finally on our way for Eurasia. 30 pence initially, and then maybe up to 40 on a 1 to 2 month time frame. On to Eco, which is continuing to improve. I think I've looked at it quite recently, but can't resist looking at it again on the basis that yesterday we had an end of day close back above the floor of the gap. That was at 23.5 pence or 23.6 pence. So that was a buy signal, charting buy signal. And then today we've had an end of day close above the top of the gap of 24.9 pence, so above 24.9. Looking for the top of a broadening triangle from the beginning of last year as high as 37 pence, perhaps as soon as the end of next month. Good to see Falcon Oil and Gas back in play as well. We've had a little break to the upside here. Break of a symmetrical triangle which has been in place since September. That's has its resistance line, or had its resistance line, at 8 3/4 pence, and above that we're looking for a partial or even full retest of 14-15 pence, which was last seen in September, and that could happen as soon as the end of next month. Guild Esports also back in favour after quite a long time here, just breaking that line of resistance from October around 3.5 pence, and just, I suppose, closing on it as well with the 50-day moving average. Another end-of-day close above that particular feature, the 50-day line, should be enough to get us at least up to 4.5 pence, which would obviously make this chart look rather more appealing than it does at the moment. We've got this bullish divergence line there in the RSI window as well. So the lower price lows but the higher RSI lows, and that is a sign of building momentum to the upside, and perhaps explains why the volume in today's session is the highest it's been for over a year. On to a stock which had its shenanigans a few months ago, but seems to have come out smelling of roses. Prospex Oil and Gas, or Prospex Energy, in fact. Maybe it's into oil and gas as well. But here we've had a break through the initial December resistance at 3.5 pence, and above that we're looking towards that January 2021 resistance line projection at 6 pence, perhaps as soon as the end of next month. Signs of life at United Oil and Gas are largely set on the basis of the gap to the upside that we saw during the latter part of last month, so a gap through the 50-day moving average. Above that, we're at 2.45. We're expecting the recent resistance at 2.9 pence to be broken and to take us up towards 4 pence by the end of next month. Early and end of day close well below 2.4 pence, really delaying the upside scenario. But that bear trap gap reversal seems to be something that is supporting UOG at the moment. Tried several times in terms of Extract Resources, breaking the line of resistance there from March. Hasn't quite done it yet. You can either wait for an end of day close through 6 pence, or take the view that at least while we're above the 50-day moving average at 5.2 pence, then the shares should be heading higher. We also have, a bit like UOG, a unfilled gap to the upside, which is a sign of momentum and does suggest that hopefully on this occasion it will be the time when the shares break higher. If they do break 6 pence, then the target here over the next 2 to 3 months, or the following 2 to 3 months, would be 10 pence. Finishing off with Zenega, and here we've got a decent picture in terms of the chart. We had a very strong candle yesterday, which filled the gap and then rebounded, and then a gap higher today. So that's a sort of double positive signal. Also got bullish divergence here with the, after that, temporary new low towards 3 pence, and so very positive looking chart, especially when you take into account that we've closed above the 50-day moving average at 4.1 pence. Above that, we're looking for 6 pence over the next 1 to 2 months, and perhaps even as soon as the next month. That's it from me today. More updates tomorrow.